Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola, and Malaysian palm oil. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of these patterns, levels, analysis, or any related items on these my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Paris Rapeseed. The market here has recently been formed by two patterns, a V-top formed over mid to late July and a more recent turn of July into August V-bottom. The resultant pattern that these two side has been a bright pink mid-June to early August bullish Andrews pitchfork, which you'll see in the market this week test the bright pink middle time from below, and that's currently at 558 even. There was also one earlier breached on both sides and seemingly repaired dark blue mid-April to mid-June bullish shift pitchfork, which prices have this week pushed up through the dark blue middle time, currently at 548 3/4. These two patterns are somewhat obscuring what I believe may be the main action this week, and that's reaching up and testing of resistances at 548.5, 553 1/4, and the 61.8% absolute Fibonacci line at 550 3/4. It is these that are the main resistances, and the colourful tines may be obscuring that, though I'll reserve judgment on that for now. I nevertheless still ponder on what I said at the start of July when I said, and I quote, "I suspect this newly drawn dark blue bullish shift pitchfork may become a significant part of this commodity's future, so watch and see." End of quote. Further up, well, we have a free area bar, the colourful tines, up to the February 23 high at 565 even, and then the congestion between 569.5 to 570, containing a September 22 low at 569.5. Whilst below, well, we still have that bright red neckline extension, though I don't know how dubious that is, currently at 530.5, and that's at the April to August 2024 head and shoulders top. Winnipeg Canola. Just one pattern still shows, even now, still shows the overall way forward here. This longer term pattern, one I spoke about 25 weeks ago when I said, and I quote, "I've also drawn in the meantime a March to December 2025 bullish Andrews pitchfork," end of quote. This pitchfork, highlighted in bright pink on my daily chart, has so far withstood the tests on the lower time, right back at the start, and an almost test, a pretty significant almost test, late 4 weeks ago, and that's of the overhead bright pink middle time, currently at 865.90, when the market rose, approached, but then shied away from truly testing the bright pink overhead middle time, falling lower for bearish Harami and outside week 4 Fridays ago. As I said here for weeks and weeks, I think this pattern is very important for now and in the future, so please just keep it in your mind and keep a watch on it. Now, the fall lower was halted 3 weeks ago by the slowly rising green short medium moving average, currently at 780.60, as well as an earlier all-time high from March 2008 at 770. All these actions prompted me to draw 3 weeks ago a late April to date, very large broadening wedge pattern, which is highlighted in dark blue on my daily chart, currently at 721 even to 872.90. It's quite wide, as you can see. This is a very large pattern that utilizes the dark blue extension to the late April to late June head and shoulders pattern as the lower trend line. As I said last week, and I quote, "I think this might be the pattern to watch going forward," end of quote. I still think the same today, and I've added a new pattern last week to show the bullish angle of attack. A bright red late June to late July bullish Andrews pitchfork, with the market making an excellent run up through the base of the bright red lower time, currently at 815.70, almost all the way up to nearly reach the earlier mid-July high at 848.30. What happens now will be most interesting, as I don't think this high is that substantial, but it could determine what we have next as a pattern. You see, will the late June to date action, will it become a double top pattern, or will it become some sort of bullish halfway hesitation That is what I'm looking at now. Most of Malaysia crude palm oil. So I've said here for most of last year, now into 26, my apologies, into 2026, I'd recognise the wide congestion that was overhead, but which became a support, then a big congestion, and now a support once more between 44.08 to 45.59. Prices which had since late March been up over it, bar one failed attempt lower in mid-April, finally punched their way down through it 14 weeks ago, but could not sustain the move lower, with an original gapping action higher, changeover otherwise, which topped out a number of times since the end of April till last week. As I've said for a few weeks now, and I quote, we seem to be close to finishing these heartbeat movements going up and down, end of quote. 4 weeks ago, prices pushed higher, significantly higher, up through the bright green upper bear channel line, currently at 45.88 of the bright green April to July shallow bear channel, currently 42.53 to 45.88, leading me to lay out some potential targets topside for this break higher, with a primary target X up at 48.80 and a secondary harder to reach target X1 up at 49.51. Both of these are around resistances. The former is around the high for this year at 48.88, whilst the latter is just under a pair of 50% Fibonacci lines, especially the 50% Fibonacci line of the July 19 to March 22 move at 49.64. Yesterday, prices reached up and just through the primary target X, closing just under it, but over the bright red neckline extension, currently at 48.44, of the venerable September 2015 to November 2017 head and shoulders top. Now, you see, that was a lot to digest, but I'm afraid there is still more. You see, this all still comes down to a piece I've previously spoken about. I noted the recent rising lows and the fairly static highs of a bullish incentive, and a new pattern emerged. An early May to early August ascending triangle pattern, highlighted in dark blue on my daily chart, which is currently 45.66 to 46.63. 4 weeks ago I said, when the market started looking at the upper trend line again, and I quote, there are no targets for this pattern as yet, as we have not breached and not broken the pattern on the upside, but I can once more lay out some potentials for what could be either a break higher or maybe lower, if this breach higher turns out to be a false break, out of this ascending triangle. Thus, a primary potential on the top side would be plus 241 ringgits from a confirmed breakout from the ascending triangle pattern, with a secondary hard to reach potential of plus 344 ringgits from a confirmed breakout from the ascending triangle pattern. Please note, even though we have the possibility of false breaks, so please pay attention to this. Thus, just in case this is a false break higher, we have a primary potential on the downside of minus 151 ringgits from a confirmed breakout of the ascending triangle pattern, a secondary hard to reach potential of minus 344 ringgits from a confirmed breakout from the ascending triangle pattern. Now it's time to see, hopefully by next week, if we will have topside targets or not. End of quote. Bit of a long quote. Well, it took its own time, but this week we have seen that break high, and so far it does not look like a false break. Thus, as a result, I have now formalized additional topside targets of a primary target X2 for the ascending triangle pattern up in the 49.05 area, an area we came awfully close to today, within 10 ringgits, and a secondary hard to reach target X3 for the same pattern up at 50.08, which is amongst a pair of 50% Fibonacci lines. I now look carefully to see how the market progresses towards fulfilling those pattern targets. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.